Hey, how you doing? And welcome to Livewire's Buy, Hold, Sell. I'm Alice Selby, and today we're putting two Hall of Fame investors to the test. They'll be analysing each other's highest conviction stock picks, and to do that we're joined by Airlie's Matt Williams and Ellerston's Chris Kourtis. Okay, first up today we have one of Matt's top picks, it's Ampol. Matt, why are you backing that stock?
I like Ampol because it clips the ticket from sourcing petrol all the way through to selling it at the Bowser. It's starting a quick service restaurant strategy. It's got all the best sites on the eastern seaboard. The management haven't put a foot wrong in terms of capital allocation, and they've done some great special dividends over the last few years. So the stock's been under pressure because of the refining margin, which is outside of its control, hitting it. So it's a good buy.
Chris, the latest result was a little bit mixed. The interim dividend disappointed, but most brokers rate the stock a buy. Do you agree? Is it a buy, hold or sell?
At $30, it's probably a buy. I'm not there yet. I'm going to wait for the next quarterly. I'm just a little bit concerned that the next result again may disappoint on the refining margins, and they have been at a cyclical low globally. They're down to about $7.50 a barrel. Crack spreads have been under pressure, so I personally will wait for the next result, but it's definitely a buy.
Okay, next up today we have Insignia Financial. It's one of Chris's top picks. It's the old IOOF. Management have been buying shares recently. Why are you buying as well?
Look, we've been there for probably a year. I'm maxed out. It's my biggest overweight in the portfolio. Huge cost out story coming. $1 billion cost base. This is not BHP. If the new CEO can't cut a couple of $100 million out of the cost base over the next 18 months, I'll be very surprised. They've targeted $65 million net for this year, so there's a cost story coming. I think there's a recovery in earnings, and at the end of the day, MLC is an excellent brand, a top brand, and it's got compelling valuation, 7.7 times PE. It should easily do its $400 million EBITDA this year, which is consensus. I think the stock's minimum up 50% from here.
Okay, that said, there has been quite a lot of drama following this stock. It has faced class actions, compliance issues and APRA sanctions in the last few years. Matt, do you think that's all over now? Is it a buy, hold or sell?
I think it's a hold. I sort of get where Chris is coming from, but you look at those legacy issues that you mentioned, still dealing with the Royal Commission fallout, the integration of all the acquisitions it's done. The fact that they paused the dividend, I think tells you something about the balance sheet and what they think of that. So, the only good thing going for it, I think, is the single-digit PE valuation. But otherwise, for me, it's a hold.
Okay, next up today we have another of Matt's highest conviction picks. It's Seven Group, has businesses across industrial services, energy and media. Matt, why are you feeling bullish on Seven?
Yeah, you picked it. I mean, it's exposed to all the major aspects of the Australian economy: mining, infrastructure and building. It's got the Boral improvement profits coming through. I think Ryan Stokes has proven himself to be an excellent CEO. So, I think we're now interested in what they do next as they've put the Boral acquisition to bed. I think it's a really long-term great story.
Okay, it's already had a stellar run in the past year. It's up 47%. Chris, do you think that can continue? Is it a buy, hold or sell?
The stock's actually doubled over the last sort of 12 to 18 months. It's sort of gone from 20 to 43 or wherever it is today. I think there's always acquisition risk with Seven Holdings. So I think it's a hold. I just want to see what they do after integrating Boral and what's next. So I think we don't own it, but I think it's a hold.
Okay, we've got another one of your top picks now. It's Fortescue. It's obviously had a really awesome week and a little bit with the China announcement. Why are you backing that stock?
Look, calendar year to date, it's down, let's call it 30%. BHP and Rio would be down probably between 8 and 10, so it's fared a lot worse. And a lot of the reasons for that are explainable. They went down this hydrogen green strategy, which they're now pausing. I look at the valuation, it's on probably 10 times PE. The dividend yield is going to be lower than what it was last year, probably around 6% versus 10% last year. But then I look at market forecasts and everyone's sort of plugging in $90 a tonne iron ore, and current spot's about 112. So I think the stock is come upgrade because the analysts are factoring in too low an iron ore price for the next sort of 6 to 9 months. And it's been incredibly resilient. We've had high cost capacity come out of the equation in the iron ore market, and demand has been resilient. And the China stimulus can't hurt Fortescue.
Okay, do you agree, Matt? Have the tides turned for Fortescue?
I'm going to say sell. It's had a great bounce off the bottom. Look, it's nothing too much against Fortescue, except again the capital allocation policies. There's somewhat a mercurial kind of view around what happens from here. You've got plenty of other options in BHP, Rio, who can, at the same kind of valuations, do the same job for you.
Okay, your last pick today is ResMed. It's obviously had a fantastic few months. Its share price has lifted 60% since hitting a low in October 23. Why do you think that can continue?
It's still priced at a market multiple, really, and the last profit result, up 17%, was just, fantastic, despite all the GLP-1 kind of noise. They had their investor day a little while ago, and it was one of the more bullish investor days I've ever seen. And if even half of that comes to pass, the stock is well placed to continue its double-digit profit growth that it's had for the last 25 years.
Okay, over to you, Chris. I know you have a very different view on ResMed. Is it a buy, hold or sell?
Look, for the record, I was the only one peddling ResMed at Hearts this time last year when it was on its bottom at $21, and it's up 60% for the record since then. So it's been a great call, if I say so myself. But I think at the moment it's a great company. Management of it, they've never put a foot wrong. Its balance sheet's in order. It's not really a dividend payer, 1% dividend yield. I think it's had a phenomenal run. I think it just treks sideways for the next 6 months as people rotate out of sort of defensives into put a bit of beta in the portfolio and rotate back into resources. But on 25 times, it's not expensive, but I think the fact that it's gone from 140 US to where it is today, or 21 Aussie to 35 or wherever it is today, I think it's happened. But me, I'm a contrarian. I was buying it when it was down and out in Beverly Hills when the GLP-1 scare was at a crescendo.
So is that a sell?
Look, great company, great management, executing brilliantly. It's a hold at best, but I'm out, for the record. I'm out.
Okay, last up today, we have your final high conviction stock pick. It's another stock that has been heavily beaten up. It's down 20% year to date. It's Ramsay Healthcare. What's got you excited about a turnaround opportunity in Ramsay?
Look, they're not out of the woods just yet, but they're heading in the right direction. So they've divested their Asian business, Sime Darby. They got $930 million for that business, higher than what the market was valuing it at. It's helped them retire some debt, but the balance sheet is still highly geared. There's $4.3 billion of net debt, excluding some of the lease liabilities on the balance sheet. And therein lies the problem with higher interest costs, which the market's been worried about. But I think they're heading in the right direction. COVID's done and dusted. People are returning to hospitals. And I think they're getting their act together. So the stock has been derated. It's gone from, everyone loved it at $60, $70, $80. You can't give it away in the low 40s. Well, that's when I'm typically getting involved. And I think it's a classic company in transition, and it's a classic turnaround story. And I think the prospects are good. They're the market leader. You cannot build a new hospital just down the road here in Barangaroo next week. Good luck with the permitting. It's a 10-year process. Okay,
last one for you today, Matt. Is it a turnaround story or a falling knife?
I'm really worried about Chris's portfolio and his investors. This is a sell. When he talks about the balance sheet himself, I think that's an issue. Look, I'm being a bit harsh. No, but the market is structurally challenged. Their offshore operations are problematic. The balance sheet leaves no optionality, and it's not really super cheap either. So sell.
Okay, well that's all we have time for today. That was a whole lot of fun. I hope you really enjoyed it. If you're not a subscriber already, remember to subscribe to our YouTube and podcast channels. We're adding so much great content like this every single week.